I had a trade last week where I had a really good entry, but the price then eventually went against me, hit my stop loss, and I lost some money. And it was making me think that your stop loss and getting that right is just about as important as your entry. And if you don't get it right, it can be the main culprit for why you're losing money. We'll look at the trade in a second, but first I want to say that I don't have this all figured out and I'm still learning and trying to get better at this whole trading thing. But hopefully this kind of some of these thoughts I have can be helpful to you and we can kind of learn and grow together. I'm primarily trading Bitcoin, and Bitcoin can be such a volatile beast. You'll have swings back and forth, up and down. I mean, look at this. This is the last week or so of just kind of up, down, up, down. It's just so choppy. And I'm sure there are other stocks and assets that are similar to this, but with Bitcoin, it really does feel like the market makers, the insiders, are targeting your stop loss. I've seen it so many times. These sweeps will happen right at where all the liquidity is, only to be reversed. And I feel like in a bear market like we are in right now, there's less volume. And so I feel like it's even easier for market makers to kind of push the price around and liquidate and stop people out. A chart I like to use on CoinGlass that kind of shows where these price points are is this liquidity map. And this price point shows that people will get liquidated if the price goes up to here. And you'll see that a lot of times this pocket of liquidity also is like above the last highest tick, and people think they're maybe safe by, that the price won't go back above that or whatever. And these keep getting targeted. Like I always see, they get targeted. It'll come take all this out, this like $1 billion of liquidity, and then swing back down the other way. So let's look at this trade where I messed this up. So I was looking to go long. We had kind of this unnatural sell-off, and so I had an entry long right here, really pretty good for the most part. And I put my stop loss a little bit below this blue line. Kind of my thinking being, we've had kind of an uptrend here, kind of going upwards. And if we go below this stop loss, this line here, that's kind of a break of that. And there's more probability that we'll continue down if that happens. So my stop loss was right a little bit below here. And you can see that because we didn't get stopped out right here. I think it was like right here. And so then on the second time down, we got stopped and I lost some money. I should have really took some partial profit as I was reaching up here, but I probably wasn't at my computer or something like that. But really, I think the main problem is that I had a bad stop loss. Like I think this is a great place for a stop loss, but you can see if I didn't get stopped out there, it just wicked here and then we continued up and I would still be in this trade today going long. You can see it even a little bit more clearly on the 4-hour chart. You can see we wicked below here, but that's just a wick. We then closed like exactly on where my stop loss was before going higher. For swing trades, I like using a soft stop loss. A soft stop loss, say that 6 times really fast, is when you actually have no stop loss at all. It's just a line, like this one right here, that when the 4-hour closes below it, then you go and manually close out the trade. This is something I learned from Mathieu. I think I'm saying that right. I'll put his channel link in the description below. What this does is allow for you to have some wicks below your stop loss line. You're fine with that. All you care about is the close values. And you can use different time frames. I use 4-hour. You could do two 4-hour closes below that. Some people do daily closes, whatever fits with your strategy. Now in doing this, you are taking on some extra risk. Like in certain situations, the price could continue down much further and you'll lose more. And that's why getting good at picking a good stop loss, a good point for these soft stop losses is really important. And another thing I'll do sometimes is just overnight, I'll add an actual hard stop loss because I'm not at the charts. And then back in the morning, I can then remove it again. Now, if you are doing a soft stop loss, I'd also advise you to have a hard stop loss. And this is basically just a real stop loss that's lower than the soft one. And so, for example, I could have had a soft stop loss here and then below this wick have my hard stop loss. And this just protects me from something really catastrophic happening all at once when I'm not there at the charts. This is kind of an art. Like sometimes I think it makes sense to have a hard stop loss and other times it doesn't. It kind of depends on the situation where you think the price is going to go. But for scalping, I'd say it probably always makes sense to have a hard stop loss because you don't want to risk as much. Kind of another big part of this that I'm learning is that With swing trading, you gotta be okay going through some pain, holding a position that is underwater for a while, because a lot of times if you get out too early, you'll miss the move. So all that being said, this isn't easy. I'm still figuring this out myself, but hopefully this was helpful. And if you have any comments or questions, put them below. I hope you enjoyed this video. And if you did, there should be another one of my videos on the screen right now that you can watch next.